Debbie Marcoux is licensed by the California Department of Business Oversight under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 094-1504, Georgia 69178, Illinois 031.005-8339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926, Heidi Slade Points, California DBO 1666881.
She's the mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call Mom.
All right, well, welcome to Mortgage Mom Radio. I'm Debbie Marcoux, and I've got Heidi Schlegel Points with me.
Good evening.
Good evening, and we've got our Credit Cowboy, Steve Eltonian. How you doing, Steve?
I'm doing wonderful. How are you, ladies?
We are good.
Not
we
too
are
bad.
good. So Steve is going to talk to us all about credit today, which is going to be amazing and fantastic because I know that there's a lot of people out there that do want to fix their credit. Maybe they've got a lot of debt. Their debt ratio is too high. Debt to credit ratio is what they call it. I know that there are collection accounts or bad student loans, so many things that can go on that credit report that can really make a difference in that credit score. So Steve is going to get us there, and he's going to help get you guys a plan and make sure that you guys are headed in the right direction. But before we get started, we need to catch up with Mom.
Yes, absolutely.
That's our time right now.
Right.
We get to catch up, right?
Yeah.
Yeah. So what do you want to talk about today?
Well, I got to go bridal shopping with a friend of mine.
You did.
Yep.
You did. You got suckered into being a bridesmaid.
I did. I'm going to be a 40-year-old bridesmaid. Didn't think that was going to happen. This is my 28th wedding I will be in. So I've definitely beat that movie of whatever.
28th wedding.
28th wedding.
Isn't it 27 dresses or something it's called?
I think so.
Okay. So we've got to unmute Steve here so you guys can hear him. Can you hear him now? Say something, Steve.
Can you hear me now? Something, Steve?
All right. Thumbs up. Mikey's giving us a thumbs up. Perfect.
All right.
Yeah. So you're 27 dresses. Now you're 28 dresses in.
I'm going to be 28 dresses in, but most importantly, the bride found a beautiful dress.
Very nice.
So it's going to be very exciting. And I went on a 4.5 mile hike this weekend.
Wow. That is
Yes.
something. That is
Yes.
something. That is huge.
Yeah.
Yeah.
So it was a successful weekend.
Yeah, very good, very good. So I've just been still trying to get through this cold. I've had this ongoing cold for months now. So just trying to get through that. Okay, you got to turn the sound up, they're saying. Oh, Steve. Oh, yeah. So we got to turn his sound up. You want to fix it, Manny? Come on in and fix it.
This is the sound?
He's
We
fine.
are seeing if we can get some sound here. So, let's see. This one me?
Nope, that's me.
That's you?
Yep.
Is this one me? Is this one me?
I think he just wasn't sitting very close
I
to
think you
it.
just have to talk a little bit more.
Yeah.
into it.
Hello, test. No, this is actually pretty low.
Yeah.
Yeah.
Well, just
headphones.
unmute. So 3-4 is muted right now. He needs to be unmuted.
I had that one
Are we
unmuted
good
and
now?
they said he wasn't talking.
There we go.
Okay, so.
Well, that's the one he had originally.
Okay, so we're good now? Can we hear
Are
me?
we good now? All right.
We're clearly
right.
not technicians.
Clearly not, right?
All right.
All right. So everybody can hear us. So, yeah, we're good. Manny's
good,
giving me
everyone?
the thumbs up.
Okay.
All right. Perfect.
All right. So
So 27, 28 dresses in. Yeah.
27, 28
Yeah.
dresses in.
There you go.
You're
And
getting over a cold.
I'm getting over a cold, still working through that, but it was a successful weekend. I'm starting to feel a whole lot better, which is good. So
Good.
yeah, I got a flu shot this week.
Yeah, good for you.
Yes, made all the kids get a flu shot. Did you get a flu shot have you had one yet this year?
You know, I had one years ago, and I was sick for 2 years, and I never
Never did it again.
No.
She says
Same
the same
boat.
thing. Heidi says the same
Yeah.
thing. She said she got one once and she'd never been sicker. But I have
Yeah.
just been sick over and over again. And I hear that the flu this year is just absolutely horrible. It's horrendous. So I made everybody go get one. Even the little guy went to the pediatrician today and he got one. So I'm pretty proud of myself for making that time to go do that.
Oh, absolutely.
And it really wasn't that bad. For everybody out there, listening, if you guys want to go get your flu shot, you can really just go to CVS and walk in. It took us maybe 20 minutes in and out to get three of us all flu shots. Really wasn't horrible. It was me, Mikey, and Manny, and Shane's going to go and get his separate. Somebody has to stay home with the little guy.
Right.
But it's...
Yeah. I
Got it
think,
done.
it works great for some and for others, like Steve and I, opposite effect, I think.
Yeah,
So.
absolutely. So
Staying
that
away
was
from
my
it.
big week, was getting the flu shot.
Yeah. So what'd you do this week?
Yeah.
Well, for me, it's, always just trying to find the balance between being a grandpa,
Yeah.
and being a father of 4 daughters, 3 that are around a lot. But being a grandpa is really interesting. Teaching the little one to not throw stuff,
Yeah.
and to
Yeah.
do it with respect, and when you're playing and all that, can be an interesting dynamic, and everyone has their take on it. Everybody in the family has their take on it, and it's like, when I'm dealing with my grandson, I want to deal with him one-on-one. Everyone side busts a little bit, but I want him to understand. I don't care what you do with others. I want you to, act with me a certain way. So
Right.
that's what I've been doing this week. It was pretty good. We had a good week.
Yeah, well,
Good.
that's good. Yeah.
Good,
And you know what?
good.
This is Mortgage Mom Radio. It's all about, raising the kids. And
Yep.
I used to say it on air all the time. You guys want to know what the best diapers are? You can ask me. You want to know what the best loan program is? You can ask me.
Yep.
But that, we're doing it. I mean,
Yeah, it's always something, right?
Yeah.
The kids, the grandkids.
Yeah, I know. I told
husbands.
Yeah, I told Manny today. I said, we've got to get a post up on social media. You just got to make sure you keep that rolling.
Right.
And he said, well, what do you want me to put up today? And I said, well, put up a good recipe.
Right.
A quick recipe that people can make that's easy. We're all working and we're busy, and even the stay-at-home moms, they're working, or the stay-at-home dads, they're working. They're working hard, and
Yeah,
so
that's their job.
Yeah.
And I'll tell you, I couldn't do it.
Yeah.
I could not be a stay-at-home mom.
No.
I did have that option,
Yeah.
when I was first married, and I thought about it for, 2.5 seconds and said,
I can't
no,
do
go
it."
back to work.
Yeah, you know what?
There's no way.
It's a hard job. It's
Yeah.
a really hard job, and I'll be honest, I couldn't do it either. I give my husband a lot of kudos. It's very, very difficult. It's not an easy thing to do, and you go stir crazy, and you're in the house, and
Right.
it's
That adult interaction, you don't get it.
Right.
We get it. We get to go home, see the kids, come back to work, have constant interaction with adults. And I see these moms. I know, a couple of my friends are stay-at-home moms, and I think, God, how do you do that all day?
all day.
All day. Cooking, cleaning, chasing the kids, running them around. I'm like, I can barely do it on the weekends. Don't get me wrong. I love my son to death. And,
Right.
our other kids and that aren't in the house anymore, and the grandbaby, I just worship. But to do it 24/7,
Right. It's
I
difficult.
give a lot of credit.
Yeah, for sure. So how did your diet go this week?
I did better. So I'm doing really well with the food. And the exercise, we're doing incredible. I'm having a really hard time giving up my wine. I really like my wine.
Notice that we're drinking water today.
Water.
We're not drinking drinks.
There's no drinks.
No cocktails in the studio
Yeah.
today.
So I did commit to not drinking any alcohol during the week,
There you
and
go.
just Fridays and Saturdays, which pretty easy. I committed to that on Friday. So
So it's her first week. It's Wednesday.
It's my
She's 3
first
days
week.
in.
I'm 3 days in.
Yeah.
And then, today we went and weighed in. I lost 0 pounds. So I think now we're going to switch from wine to maybe a spirit on Fridays or Saturdays.
Just try to find something.
Just try and
that
find
works better.
something that works a little bit better. And, I like to relax with, a cocktail.
Yeah. Yeah.
Especially on the weekends. So I'm going to try that. But I was a little sad that Debbie lost more weight than I did.
I did. I was down 3 pounds this week, so I've got 5 total. We've done it for 2 weeks now.
Yep.
Very excited about that.
Yeah, I'm
I
down
did
2 total, which is
I
painful.
did give up my wine,
Yes.
which Heidi refused at the beginning, but I think now she's seeing that she's got to do it. But we have been exercising almost every day.
Yes.
So, that in itself is going to tone us up, and maybe you didn't see the weight loss, but I'm seeing the shrinkage, which is good.
Yes,
Yeah.
I'm definitely down physically in size,
Yes.
which is great. But I really want the physical size and the scale.
Yeah.
So I'm going to have to work a little harder about no wine.
Yeah, well, we'll get you there.
Yeah.
So for everybody listening, you guys are watching. We are going to take questions. If you guys want to call into the office, we will get you right here on the studio. Everybody can hear you right here through YouTube. We want you to ask us your questions. We're going to get Steve talking about credit here in a couple minutes. He's done some fantastic work for my past clients. If you guys want to send us questions through text, you can text the word mom to 474747. You can ask us your questions there. You want to go ahead and put it up in the feed. We can see that and read it to you. We got a big screen right behind Mikey that we can read those questions right out loud, and we can answer those for you. After we're done with credit, we're going to get our tax grandma back on, Denise Taylor, and she's going to talk to us about some, rules and things that she has been able to find, kind of keep us all at the tip of our toes here during tax season. It just opened yesterday. Tax filing opened yesterday. So if you haven't filed those tax returns yet, you've got to get that done. But again, if you guys want to give us a call, please feel free to do so. It's 844-935-3634. Remember, if this is Saturday and you guys are listening, we are recording this show on YouTube Wednesdays at 5. So every Wednesday at 5, you guys can watch us record. You can see us make mistakes. You can see us have to fix the board because the sound isn't there. You can, you're going to see all of those things, and you can actually ask us those questions live. You can get your questions right on air. So we want you to call into the office. We want you to ask us those questions. We want you to put them in the feed and get those text messages out. So text the word mom to 474747 so that we can answer those questions for you while you're watching.
Right. And we did think of something kind of fun that we would like to ask our listeners to participate in. Debbie and I would like to do a commercial.
We would.
That we would stream live here and then put into the radio. And we would like to ask our previous clients to take a quick video, 30 seconds or less, to, in their own words, give us an example of their experience, right? 30 seconds about their experience with working with Mortgage Mom.
Yeah, we want to know. We want you to tell us, and we want to be able to use that to tell others. So, if you were happy with the experience or you were frustrated with the experience, that's okay too. But we want those testimonials. We'd really, really appreciate it if you guys did that. So email them into us. Do a quick 30-second video from your phone in your kitchen, in front of your house. If we got you into that first house, do it, from work, wherever you guys want to do it from. But we'd love to hear from you. We'd love to use that. And we'd love to put you right here on YouTube with us. And,
do it with swag. Whatever you do it with swag. Get on YouTube.
There you go. Yeah,
absolutely. Just take quick 30 seconds or less video on your phone. And we would like to take those clips, put it together, and make the next Mortgage Mom commercial.
Yeah, absolutely.
For YouTube and for Go Country.
Yeah, absolutely. We would absolutely love that. So please, if you guys are willing to do it for us, you've worked with us and you're happy with us and you love it, that would be fantastic. We would be.
And Debbie, where can they send that to?
You guys can email it right to me. So if you've worked with us before, obviously, I'm sure you've got my email address somewhere, but it's Debbie@mortgagemomradio.com. So pretty simple. You guys can send them to Heidi too if you guys liked her better than me.
Yep.
And you guys can say that. I mean, you guys tell them, Heidi was great.
Yeah, I don't mind hearing that every now and again.
I'm sure she'd love it.
But yeah, please participate. We would love to see your genuine testimonials. Put that out there on YouTube. Make it our next commercial. It would be so much fun. We would love to hear from you. Again, if you do send the video, it means that you're allowing us to put you live on YouTube and use your video and your voice for our next commercial for Mortgage Mom Radio. So please participate. We would love to hear it. Love to see you. And yeah, it'd be fun. We can't wait.
It will. It'll be great. So we are going to take a quick break. And when we get back, we are going to 100% focus on credit. So if you guys have those credit questions and you want to get those coming in, please feel free to start typing those into the feed. Start texting us. Text the word mom to 474747. You guys can call us. Call into the office. We're going to transfer you right over. All of us, me, Heidi, and Steve, will be able to hear you. Everybody on YouTube watching will be able to hear your questions. And everybody on the radio on Saturday will be able to hear that as well. So get those questions coming in, get those phones ringing, get those text messages coming, and start typing it in the feed. But we're going to take a quick break, and we'll be right back.
Do you own your home? Have you considered what could happen to your home if something happened to you and your family had to go through the dreaded probate process? Hello, I am the estate planning mom, and my name is Krista Hermance. I am an estate planning attorney at Hermance Law. If you own your home and something happened to you, depending on how title is held, your family may have to go through probate court. Probate in California can take an average of 12 months to 2 years to complete. It is very expensive and public. A will, while it states how you want your stuff distributed, doesn't actually avoid probate. It just guarantees it. it. If you want to avoid probate, a trust might be your best option, and we can help you figure that out. We have offices in Ventura, Westlake Village, Santa Clarita, and work with clients virtually throughout California. For information, text WILL to 474747. Again, text WILL to 474747.
This attorney advertising is intended for general information only and not intended to be legal advice, nor does it create an attorney-client relationship. Attorneys at Hermance Law are licensed to practice law in California only. You should seek advice from a legal professional licensed in your state. Hermance Law is located in Ventura, California, and can be reached at 805-518-9633.
Ask the Credit Cowboy about your credit needs.
Hi, y'all. Steve Altoni and the Credit Cowboy from Credit Law Solutions. Do you have questions about your credit and how it may be preventing you from purchasing your dream home? Ask the Credit Cowboy. Offer a free consultation where we'll go over where your credit currently is and how we can help you improve your credit so you can get into your dream home today. Call the Credit Cowboy at 818-932-9531.
AskTheCreditCowboy.com. She's a mortgage mom.
Mortgage Mom here. Did you know that property values are up and interest rates are down? Do you have some debt that you'd like to get paid off? Give me a call. It's 844-935-3634.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
Debbie Marcoux is licensed by the Department of Business Oversight under the California Residential Mortgage Lending Act, California NMLS ID 237926. Also licensed in Texas and Tennessee, 184373, Arizona 0941504, and Nevada 57237.
All right. Well, welcome back to Mortgage Mom Radio. I'm Debbie Marcoux, and this is Heidi Schlegel Points.
Welcome back.
Welcome back. So we are here on YouTube Live every Wednesday at 5. If you guys are listening to us on Go Country Saturday at 7. If you guys want to watch us live, you want to see us record it, just start checking us out. Go to our page, go to Mortgage Mom Radio on YouTube, subscribe to the channel, and put on your notifications. When we go live, it will let you know that we're there. So every Wednesday at 5. But we've got Steve Altoni in here, my Credit Cowboy. Many of you guys that listen to us, who've called in, who have worked with us, have actually talked to and work with Steve as well. And Steve is going to give us all kinds of credit tips and advice today. So one thing that I'm actually I want to know more about. I'm really like, I want you to dig into this for us. Yesterday, you sent out a newsletter to all of your clients that talked about the new scoring model and how Equifax, Experian, and TransUnion are going to be changing the way that our credit scores look. So I wanted you to kind of get into that a bit.
Sure. It's funny. Every now and then, the scoring model will change just a little bit. And sometimes it works in the consumer's favor. Other times it doesn't. This time it seems to me it's going to be split. The way it is kind of set up now, they're going to do FICO 10. So I don't know, as a lender, what are you currently using? Are you on 9 or still on 8 or whatever? In any case, most lenders, from what I understand, will be...
And I'm going to be honest with you, we don't know. No. Because the mortgage companies are, they set that up where we're sending the loans through. We pull credit based on what they're wanting. So, they say, we don't know if they're using 8, 9. We're definitely not using the credit report that is showing us balances over time. So which one is that one? Where you can actually see if you're paying your credit card off every month or
the trended report.
Yeah, we're not using a trended report that came out for a minute about 2 years ago.
Correct.
And then it went away.
So, and that's the interesting point. It came out for a minute, and you're going to see it reintroduced because FICO 10 and FICO 10T, which I couldn't find anything on the internet what the heck the T was, so I said, well, I think they mean trended. I'm going to assume that's what it means.
Guess,
so,
yeah.
So the way FICO, Fair Isaac Corporation, which is what FICO stands for, is going to be doing it this time, is they want to make sure that if you're paying your credit cards, you're paying consistently over a period of time versus what you've been doing lately. And it's really interesting because when I first got into the credit repair business, you learn things as you go through in life.
Oh,
right?
absolutely.
I don't know.
Yeah.
I remember when I was a loan officer, I thought things were gospel, and it turned out I was really wrong. Well, one thing on credit was I used to tell people, how you pay this month matters and how you pay next month matters. And I'm telling people this for my first year, and I'm convinced. And then finally one day I realized, through a little bit more, investigation, and seasoning that wasn't the case. But it made sense to me, and my validation comes 7 years later because now FICO agrees with me, and they changed it to agree with the way I originally had it. So I really wasn't wrong.
I like the way you think.
So what you're saying is, right now we pull a credit report, somebody's credit score isn't quite as good as what we want it to be. And so we give them the recommendation to maybe pay down some of those debts to do that rescore to get that credit score up. And what you're saying is if we do move to this FICO 10T, the new model, with the trended, they're not necessarily going to get that same bump because their credits,
You will not get that same bump. And it was interesting because yesterday morning, and it's funny because, all this was coming about, and I was like, what's really going on? I said, well, this has been coming out, and I'm looking at it, I'm saying, well, this isn't really making sense. So I did some investigation. But the FICO 10T will be out for most lenders probably by the end of the year. That's what they're saying. It's going to be out by
everybody's going to move to. Okay.
Out by the end of the year. So with this particular one, you can't pay at the end of, for example, I was telling someone on the phone in the morning, I was telling them, and usually I don't want people to charge my services on their credit card. And I told them, I said, the only time I will let someone charge my services is if you're going to charge it and you tell me you're going to pay it within 30, 60, 90 days. Because I told them, by the way, we want you to pay your cards down about 30 to 45 days so your score will boost before. And you know what? When I told them that, I thought it was right. This was yesterday. Mm-hmm. And now with the new model, it's going to be incorrect.
Right.
It's not right now because they're still breaking it out. But gone are the days where you can pay down your cards and immediately have your credit score bump up.
Right, gotcha.
So you're going to need to do it for a few months, which is what I used to tell my clients when I first came in as a young lad of 40, whatever.
Okay. All right. So we actually have a question right now. It's from Whiskey Walrus. We love him. He always asks us questions, but he says, "Hello again. My wife Gladys has a question about Credit Karma and other service like that. Are the scores they provide you with your actual scores, or are they an estimate to your actual score?"
Well, Whiskey Walrus, I am the Eggman, just so you know. And
You're the Eggman?
I'm the Eggman. Remember the old Beatles song? I'm the Eggman.
All right.
Anyways, okay, great question. Credit Karma is something that is used consistently, and it's based on Vantage 3.0.
Okay.
So that's not FICO, totally different companies. The scoring models are generally different, anywhere from 25 to 75 points. And it can go either way.
And we see it.
And we see it.
They see it constantly. One thing I did put out in the newsletter, and I just threw this in, I think because Vantage already has the trended accounted for, I think that gap's going to close a little bit. I don't know if it's going to be dramatic. It might be 10, 15 points, but I think it would be closer because Credit Karma's already using the trended. They're not. So they'll be more on board. So I look for that. But generally speaking, a soft pull, which is Vantage 3.0, is not going to give you an accurate score from what a lender would pull. However, it's going to tell you what's negative. It's going to let you know what's going on with your credit.
It's still a great way to keep your eye on it. But what I have noticed kind of on average is when somebody says that they have Credit Karma, first of all, Credit Karma gives you 2 scores typically, not all 3, is what my experience has been. Mm-hmm. And usually the credit score on Credit Karma is higher than what we get when we pull as a lender. Mm-hmm. And it's usually higher, I would say, by about 30 points, wouldn't you? When you say on
absolutely.
average? Yeah.
And mine, because I recently got my new scores, and my Credit Karma, I have to tell you, was way off.
Really?
Way off.
High or low?
Low.
Wow.
Low. So had I counted on Credit Karma, I wouldn't have done, and you're going to touch on this, I wouldn't have done my consolidation personal loan.
Right. So and that is kind of, because you're going to touch
Right.
on that with all of the new stuff
the
that's
new
coming out.
Yeah, and that's another part
So
too.
I counted on Credit Karma. I mean, it showed my scores high 6s, low 7s.
Wow.
Versus I was a 790
or 90.
793
Yeah. The one
or
with the best
something.
credit in the world over here.
Right. So I mean, it was a huge gap.
Right.
But yours was lower.
Mine was
Yeah.
way lower.
See, most of the time, clients is higher.
Right.
Yes.
And we
And
do
the clients
see
get
that.
really
upset.
upset.
Yeah. So
Because
so
of-
now I don't know where it trends, right? Because I'm looking
Yeah.
at it going,
Wow. Okay. So we've got, Whiskey Walrus did say that's my all-time fave Beatles song. So you hit it right on the head.
we had no idea what
We
you were
had no
talking
idea
about.
what you guys were talking about.
Showing my age. Oh, Lord.
Love it. All right. So Anne asks us if you have collection accounts that are affecting your credit score, is it best to pay them off in full or is it best to negotiate? Is it easy to get things removed from the report?
Okay, so the question comes down to how do collection accounts affect your credit score, and does paying off a collection account actually help you? It's very minimal times when paying off a collection account will help you. There will be times when you'll get on a what if scenario,
Right.
where it will tell you if you pay such and such an item down, it will help you, and I've come up with the reason for that.
Yeah, I'm wondering because there are times that when I
I'm
run
gonna
that
tell you why.
simulator, it will say pay
about
off that collection.
About a month ago,
Yeah.
I was in office and we were just shooting everything with our whole staff, and I brought up what you said, and it finally dawned on me why it happens. Because when you're paying off that collection, it was a credit card, which affected the utilization. So the utilization has gone down. You paid the collection. You affected the utilization. That's why the score went up. It wouldn't go up for
like a medical
for a
collection.
medical or
Right.
a car that's not utilizing your available
Yep.
credit.
And
Gotcha.
I figured that out about a month ago, and I'm like, okay, that's the reason for that one. Ellos
that
come
makes
to me
sense.
and,
Yeah.
and tell me that, and they're like, and I never had a good answer for anybody. So it's like, it's just one of those aberrations. But
Right.
it's utilization, and if you pay it off, it's going to help your score. So that's the one time that it will help your score if you're paying off a collection account, if it affects your utilization. Now, pay it off in full, or settling, it's going to be the same thing as far as your score. It's not going to help your score either way. Do what's lighter on your pocket would be my best advice to you.
Now, I have a question for you because recently I had a client that did have a collection account. They were in a big argument with Verizon. Go figure. That's the one we always see that's on there. Or AT&T. It was AT&T. It was AT&T. And AT&T is always the one that we see on the collections for some reason. We see Verizon too. I don't know. The cell phone companies. It's something about them. Anyway, so they were in a big argument with them because they had switched over from one service provider to AT&T. And AT&T told them that they had an unlimited plan so they could call international. Then all of a sudden they get this big giant bill. They're going back and forth with, AT&T to the point that, they're telling them they're going to fix it. And then they never do fix it. And they just finally get frustrated and they move their service. And they end up with this collection account because they didn't pay the bill because it wasn't supposed to be there to begin with. But they never really got it settled. So, they asked me, what should I do? And I said, we need to ask the Credit Cowboy, you need to first call and you need to see the collection company if there's any possible way at all that you can make a payment and they will remove it from the credit report. If I pay you right now today, will you remove this from my credit report? Not update it to paid in full, not settled for less. If I pay it right now, will you remove it from my credit report? Sometimes they will do that. Other times they're going to say no. And I told them, I said, if you call and they tell you no, they won't do that. I need to call and ask the Credit Cowboy if you should make that payment, because I've seen where people will make a payment on a collection account and their FICO score will drop because now all of a sudden they've kind of refreshed that account.
Right, exactly. So it'd be say 2017, a $1,600 account. Now you pay it, it's 2020, so you update it.
Right.
Right.
So in that situation, though, if you've got this collection account that is old, if you have something that comes on collection and all of a sudden you realize it's there, it was yours, and you can pay it immediately, it's all right there and then. It just reported. Now you're going to at least pay it. Now it's going to be at least a zero. And now that collection account's going to start to age, right? And it's going to age at a zero balance. But if it's a collection account that's been around for a while and you've got this balance sitting on your credit report and they won't work with you, if you pay them, they're still not going to remove it. What's your best advice?
Well,
what do they do?
It really, I tell people, sometimes the best move is to do nothing at all. And, the only reason I would tell people to pay it is, one, if you feel you're going to get wage garnishment, you don't want to get sued, you don't want the calls, then you pay it. That's your decision. The other is, in the course of your getting a loan, the underwriter says, hey, I'm going to loan you $500,000. I need to pay this $3,000 collection off. Then if you want that $500,000, you're going to pay the collection. Other than that, there's really not a whole lot of incentive. Unfortunately,
doing the right thing isn't necessarily
FICO
helping you out.
doesn't make it where it's, your score is laden to what your balances are. And it makes sense. I guess it makes sense if I was a business owner. I wouldn't want people coming back and making good and then trying to loan them money and really know that they can't borrow money. So I guess you got to look at it from all angles. But whatever, we're at war. So we're trying to get money for these people.
Okay, so back to the last part of Anne's question. So that kind of actually answered her question, because she said, is it best to pay them off in full, or is it better to negotiate? Obviously, if you've got those collections on there, for us in a lending standpoint, if you have more than $2,000 in aggregate balances in collection accounts on your credit report that are not medical,
Right.
you do need to pay them off or get on a payment plan. So in that situation, you should try to negotiate those for less. You can pay them.
Absolutely.
You can definitely negotiate for less, pay them for less than what the balance is that's due. We're still going to look at that as paid in full, because you did pay and they did give you a zero balance letter, and that's all okay. But if it's something that's been sitting around for a while, what do they do? And that's, kind of, I think, the big question. And it sounds like from you is kind of wait, maybe try to start the credit repair process, see what you can maybe get off that credit report.
Yeah, I mean, if you're doing credit repair and you want to get it off to help your score, it's going to help your score. Once something's older, it's like, I don't know if you've ever looked on like your hands and found a mark or a nick you don't even remember you had it.
Oh, yeah.
Yeah.
And you've got a scar, and it's like, where did that come from? Well, it hurt when you first had it. Now,
You just can't remember.
You don't remember it. Same
Right,
thing with
right.
your credit. So, after time, your credit will heal up. When people come to us, we get items removed, and then we're building their credit, and then a little bit of time, and, that's really what makes, things cook a little bit quicker.
Right.
But if something is older, you're better off just kind of letting it alone.
Just kind of leaving it be.
Yeah, unless you have a real reason to pay it. Like I said, an underwriter, you're trying to borrow money, you're trying to get a business loan for $3 million, and they want you to pay a $10,000 collection, then you do it. So.
Right.
How long can a collection stay on your credit?
7 years from the date of last activity, and that's why you just don't want to keep re-updating it. So.
Right. Okay. Now, here's the next question: is let's say that they go through credit repair with you, and you get an item off of the credit report. How likely is it that item would come back to haunt you?
Right. Okay. So when you're going after an item and you're going to the bureaus, you're going to the original creditor, and you're going to, say, a collection company, at least we as a company, we go to all three. Okay. A lot of companies only go to the bureaus. So if you only go to the bureaus and the next month Chase wants to re-report it, it's going to re-report it. So the odds are less with us as a company. It doesn't mean an item never will come back on.
Okay, because you guys are going not only to the three bureaus, you're also going to the actual creditor.
The creditor. So
Okay.
we'll deal, for example, if we're dealing with Capital One or GM or whatever the case may be, Sierra, whatever the case may be, we'll be dealing with these companies directly, and then we'll also deal with the bureaus. And the reason we do that is we don't want the item to pop back up.
Right.
Like I said, it doesn't mean it ever does, but I can, when people ask that question when I'm talking to them initially, I can say, I would say in my lifetime, it's got to be maybe 3%. I mean, I just don't get those complaints.
Right.
Just because of the way we do it now, where someone comes up and says, hey, the item came back on, and I just don't. So, but if it does, then you deal with it accordingly. And there was a reason why it was.
So very minimal, though, when
Yeah,
you're
very
approaching
minimal.
it
Yeah.
correctly.
Yeah. Or it got sold to someone else, a collection company, and it's a different collection company.
And now that
Right.
collection company
And
is
that's-
now reporting
That's
it.
different.
Right.
Yeah.
Yeah.
So maybe if you can get it off the credit report, then maybe it would behoove them to call and pay it. so that it doesn't get back, it doesn't get sold
Right.
and off to the next company to be re-reported.
And also, there is always, garnishments and stuff like that.
Right.
Right.
Now, let me ask you a question. Let's say somebody does get a collection or they have one on there, or they've got late payment showing, and they want to try to dispute it and get it off of the report, and they do pay it. Are they basically admitting that it was theirs, that they're at fault, so now they've got a way less chance of getting it removed? Does that piece matter?
Well, I mean, technically, if you pay something, you're admitting it's yours, right?
Right. So does that make it more difficult to get that off?
So technically it should, but technically it doesn't. Here's why. Because you have the human element. Because at least for us, when we launch our investigation, I think because we make life so miserable for them, some people just figure, you know what, this sucker paid this. I don't care.
Right.
And then, I'm not saying everyone does that, but I know that happens.
Right.
They're like, we got our money.
Right,
And
we
want
got our
them to
money,
go.
we don't care. So
we
it-
want to get the pit bull off of us.
It does work, exactly, and that's the theory behind it. So
Right.
when someone has already paid it, I don't fault them, but I'm not going to tell someone up front, pay it unless, like I said, any of the other scenarios.
Yeah.
Right.
Well, so when we come back, because we need to take another break, but when we come back, I do want to get back to that new scoring model because I think it's really important. There were some other things that did come up that were, changing. And so, because I read on your newsletter about, having personal loans and paying, then charging consolidations and then charging up the credit cards again after the consolidation loan is there. And, just things are changing. So I want to make sure that we do touch on that. I know that you've got a credit report sitting right in front of you there. And we want to kind of go through, credit scores, what you see, and with your credit repair company, what would be your advice for this person? And how would you suggest that, what would be your suggestion to move forward? What do you think your success rate would be with it? So I think that it's a good live evaluation that people can hear, what a consultation would be like. So we're going to pretend this is my credit report. We're going to say that it's me. And I want you to give me your evaluation of it. And what would you tell me? And what do you think the success rate would be? And how long do you think it would take? And all that good stuff. So I think that sometimes being able to hear that helps for others that are listening to understand that, there's hope.
Right.
And,
That are in similar situations with true data.
Right. Absolutely. So we are going to take a quick break. If you guys do want to ask questions, please put them in the feed. We'd love to hear from you. We will answer them for you right now. You want to give us a call, we're here at the office. It's 844-935-3634. And yes, the office is our studio.
We are here all the time.
We're here all the time. We practically live here. We work out in the conference room. And if you guys want to, go ahead and get those text messages. So text the word MOM to 474747. Send us your messages by text. We'd be happy to answer those. I'll read those on air as well. And if you are listening to us on Saturday, you guys want to watch us live, watch us on YouTube. Wednesdays at 5, and subscribe to the channel so you guys know when we go live. I do believe you have to turn on the notifications. My little man back there running the board is telling me you've got to turn on the notifications to know when we go live. But you guys can always keep listening to us on radio too. So
And don't forget to send your videos.
yes, and we want the videos. We did say that a little bit ago. If we want to have some testimonials, anybody that has worked with our team in the past that listens to the show, we'd love you guys to take a quick snippet of yourselves, 30 seconds. We want a video, and we want you guys to give us your testimonial so that we can create a really cool Mortgage Mom radio commercial.
And bring the heat.
Bring the heat. That's right. What'd you say earlier in the show? Bring the swagger. I
Bring
think
the
you said.
swag.
So some swag.
Yeah. All right. We're going to take a break and we'll be right back.
She's a mortgage.
Do you own your home? Have you considered what could happen to your home if something happened to you and your family had to go through the dreaded probate process? Hello, I am the estate planning mom, and my name is Krista Hermance. I am an estate planning attorney at Hermance Law. If you own your home and something happened to you, depending on how title is held, your family may have to go through probate court. Probate in California can take an average of 12 months to 2 years to complete. It is very expensive and public. A will, while it states how you want your stuff distributed, doesn't actually avoid probate. It just guarantees it. If you want to avoid probate, a trust might be your best option, and we can help you figure that out. We have offices in Ventura, Westlake Village, Santa Clarita, and work with clients virtually throughout California. For information, text WILL to 474747. Again, text WILL to 474747.
This attorney advertising is intended for general information only and not intended to be legal advice, nor does it create an attorney-client relationship. Attorneys at Hermance Law are licensed to practice law in California only. You should seek advice from a legal professional licensed in your state. Hermance Law is located in Ventura, California, and can be reached at 805-518-9633.
Ask the Credit Cowboy about your credit needs.
Hi, y'all. Steve Altoni and the Credit Cowboy from Credit Law Solutions. Do you have questions about your credit and how it may be preventing you from purchasing your dream home? Ask the Credit Cowboy. I offer a free consultation where we'll go over where your credit currently is and how we can help you improve your credit so you can get into your dream home today. Call the Credit Cowboy at 818-932-9531.
AskTheCreditCowboy.com. She's a mortgage mom.
Mortgage Mom here. Did you know that property values are up and interest rates are down? Do you have some debt that you'd like to get paid off? Give me a call. It's 844-935-3634.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
Debbie Marcoux is licensed by the Department of Business Oversight under the California Residential Mortgage Lending Act, California NMLS ID 237926. Also licensed in Texas and Tennessee, 184373, Arizona 094-1504, and Nevada 57237.
All right, well, welcome back. I'm Debbie Marcoux, host of Mortgage Mom Radio, and I've got co-host sitting over here, Heidi Schlegelpoint.
The mortgage grandma.
Yes, we can call you the mortgage grandma. And then we've got our credit cowboy here, Steve Altonian. Thank you so much for being with us.
Hey.
Yeah. So we had some great credit information in the past, right before the break, and we're going to keep going with credit right now. Anybody listening, anybody watching, we're live on YouTube. It's Wednesday at 5, always Wednesday. We're live at 5. That's going to be my new thing. We're live at 5, Wednesdays on YouTube. So if you guys are listening to this at a later date, you've probably already missed another show we've done. So go check out our YouTube channel, subscribe to it, and turn on your notifications. That way you know when we are live. You guys want to ask us questions, it doesn't matter. I understand if you guys are watching this at a later date. Guess what? The telephone number, the text messages, and everything. Go to the website. There is no way you can't get a hold of us, and the numbers always work, and the text messages always work. It's not only when we're live. It's Saturday, it's Sunday, and it's all week long. So text the word MOM to 474747. Ask us your questions there. You guys can get my phone app. You can download that. There are so many tools in that phone app. It's absolutely unimaginable what you can do with that thing. You can run payment calculators for VA, FHA, conventional. You're going to put in your credit score. It's going to figure out your mortgage insurance. It's going to figure out those property taxes, that insurance, homeowners insurance. So much that you can do with that phone app. It's really fantastic. All of our shows go to podcasts. So if you're a big podcast listener, you guys can listen to the podcast. Everything we've done over the last 3 years is there. So, if you like to listen to podcasts, you guys know where to find it. And all you got to do is put in Mortgage Mom Radio. Or you guys can watch us right here on YouTube. So
Hey, I even used the app to figure out for a toy hauler for Jeremy. Figured
What
out
his
what my
payment
payment
would
would be.
it works for anything. It's a principal and interest calculator. If you don't put in taxes and insurance, it's not going to run it. It's going to give you, so you guys can play around with that.
Very handy.
Yep. You can contact us right through that phone app. So you'll get a link. When you text me, you text MOM to 474747. You will get a link that you can click on, and you can actually download it to your phone, and you can use that phone app. You want to go to our website, go to mortgagemomradio.com, and everything that you can do on the phone app, you can do on the website as well. You can contact us through both phone and website. You can email us. You can call us. There's literally click to do whatever you want buttons on both. And, you guys can, the number's easy. It's 844 We Lend for You. That's LEND and the number 4. So please, you guys reach out. We want to hear those questions. We want to answer them for you. And we don't care what day it is. We don't care how long ago we made this show. The number never changes. So we want you guys to reach out. We want to get those questions. And if you guys have questions for Steve and it's about credit, we want you guys to ask those questions. And if we don't know the answer, we will get you and Steve put together. So that is really important that we want to make sure that you know. So, a credit show is something that people will go back and watch in a year from now, 2 years from now, 3 years from now. So if you guys want to get put together with Steve, even if this is an older show, we're going to get you guys to him. So we were talking about the Vantage 10. I wanted you to give us a rundown of a credit report you've got in front of you that I'm going to pretend it is me so that we're not divulging any names or information.
Okay.
So I want people to understand what you do and how you do it and why you're so successful at it. But a couple of things I want to get into with that Vantage 10, because one of the things that I read was if you've got a really good credit score and your credit score right now today is over 700, you're probably going to see your score bump another 20 up with the new model. Right. But if your credit score is low, you're probably going to see your credit score drop another 20. So...
Right. And I think the reason for that, if you think about it, because now it's going to trend over 24 months. And the people who have good credit have shown consistently that they have been taking care of business. While the people with less than stellar credit sometimes might be a little bit challenged, and they're going to probably do the same things during that period of time. So historically, the way it looks, it's going to be about 20 points for people 600 and below. They're going to lose.
They're going to lose.
And then 680 and above are going to gain about 20 points, which is probably consistent with other changes in FICO that we've had over the years. So.
And then you said, too, that they were going to actually be a little prejudiced. So if you did do a debt consolidation loan, which we've talked about, and Heidi just did one to get all those credit cards paid off, that if you do one of those, so let's say that you've got credit card debt, you do a debt consolidation, take out the personal loan, leave the credit cards zero. Is that are they going to judge as harshly on that, or is it truly about then recharging those cards again?
Right. So the way I'm understanding it at this point, it's going to be if you get into trouble after that. Right. So they're clearly going to be able to see if you transferred, credit card balances to a personal loan, and that's the kind of data that they're going to be looking for. Installment loans had less value on your credit score to begin with. So now it's going to be even less, based on this. It's going to affect it a little bit. It's really interesting because, definitely Big Brother is watching. He wants to make sure that your finances are in order. So the 24-month, trended way of doing it, and now actually holding it accountable, it just makes sense. So, but anybody who had an installment loan, it's going to carry even less weight because and if you went and got back into debt, they're gonna find it and they're going to ding you for it. Now, what the score is on score hit on that, it's going to be I don't know, but they can hit you. It's going to be an algorithm.
Well, here's a question that I'm wondering is that we have a lot of clients, and even myself, that I'll use my credit card because I don't want to use my checking account. I've had my debit card stolen so many times that I don't want to use it. So I'll use my credit card and pay it off every single month. So, but what happens is that every single month, my credit card balance goes up to about 50% of my limit, and then I pay it off and it's zero again, right? Mm-hmm. But what the credit company sees, the credit report sees, is what the balance was at the time that the statement printed. And so then for me, it's going to look like, even though I've paid my credit card off every single month, it's going to look like my balance was $5,000, right? And so it's maybe not necessarily going to be giving
it's still going to show that you made a $5,000, you made a payment.
It's not.
Well, it's going to show you made a payment.
It's going to show what the payment is.
So it does show the payment that the person made. That piece.
Yes.
Oh, okay.
So
and that's what I was wondering.
Show that you're making your
so
payment.
if you charge $2,000, let's say you pay back $1,000, which is decent.
Right.
They're going to notice that. If you charge $2,000 and didn't, that's going to be taken into account in the scoring model.
Okay, so that new credit report's not only going to show the balance at the time that the credit report, or that they reported, so that statement printed, but it's going to also show the payment that was
what
made.
you paid.
It's going to show your trending utilization, right?
Well, but trending utilization, how you're paying, how high your cards are 6 months ago, a year ago, a year and a half ago. Remember, it's a 2-year model. So
no, I get that. But in my head, I see when we pull credit reports right now, what we see is the balance that's on the credit report. And I tell people this all the time. Be conscientious. They ask me, when should I pay the card off? I say, be conscientious of when your statement prints. Right. So that day that you get that email in your email box that says, your statement is ready. I'll tell people, go back to that email and look for that, your statement is ready. Because that balance, that day that statement prints, is what is being sent to the credit bureau.
Right.
So if you want to make sure that on your credit report your balance is lower, you need to make sure that you pay that balance off before that statement prints.
And that's why I always tell people a week before your due date is when I tell people to actually do that, based exactly on what you're saying.
Right.
Yeah.
But the problem is that if that, and that's why I'm asking, like, are they going to actually show the payment being made or just the balance that is carrying? And it's something that you can get us that answer down the road if you don't know it. But you know, if I'm charging $5,000 every month and I'm paying it off every month, but it's always going to be kind of around that same amount, and they're not showing the payment that I made against that balance the month before.
I'm
right?
kind of looking at this report.
Trending.
Excuse me.
Oh, so that one's actually got the trending on it. Nice. Okay.
Yeah, and this was not planned. This
Okay.
was totally not
Yeah,
planned.
yeah.
We were
Trending.
actually looking at some other stuff, but it does actually show the payment. For example, this was someone paid $40 and they paid $86 on April of 2017, then 40, then 50 in December. So each month's going to be different.
And it
Yeah.
is showing the payment
It's showing
being
the
made.
payment
So that's
and then the
amazing. That's awesome,
percentage.
because when
Yeah.
I read your thing yesterday, I started panicking for myself, because what it said was they're going to start looking at that data
Right.
and what that, you know, and what your trending is, what are those balances over that 2-year period.
Right.
And all I could think to myself is like, well, my balances are going to look horrible even though I
Right.
pay them off every
Yeah.
month. So that's actually great that they're reporting the payment made.
Yeah.
You know,
Right.
that's
That's
going to be a big, huge difference.
Right, yeah, and that's key. So
Right.
if you charge your American Express and you pay it off, that's what they're looking for.
Right. So we've got Erica up here. She said, you know, I have the same problem. My numbers bump up and down a couple points every time. And sometimes my credit company doesn't update every month. Sometimes it shows I have a balance even when I don't. And, you know, that can be very frustrating. And so
Yeah.
the biggest piece of advice that I can give you to Erica and to everybody else that's watching or listening is, again, like I just said, we all get an email that says your statement is ready. And if you are not at a point yet where you're using email and you're using paperless, get there, log in and get there. Even if you still want the statement in the mail, that's fine. Turn off paperless, but put on notifications and make sure you're getting notifications. That way you could go back and you can actually search Capital One in your email box, and you can look to see, when did I get that last email that said your statement is due. Make sure that you make your payment, or your statement is ready. Make sure that you make your payment before that recurring date each month, because the balance then will be lower, and when they report it to the credit bureau, it will be accurate. So okay, awesome. So what I want you to do is I want you to talk to me as though I'm your client, and you are, looking at my credit report, and you're going to give me advice. What can your company do for me? So this is Steve Altonian, Credit Law Solutions. If you guys have listened to us before, you've heard him. He's got his commercials in my show. He's done a fantastic, just bang up job for all of the clients that I've sent to him. Really, truly amazing stuff. He's here because he does a great job. And I would not promote somebody that wasn't doing a great job. But I want you to understand what his service is, because a lot of people don't really understand what is credit repair going to do. And one thing I can say is that my mom's in lending. She's been doing it longer than me. And she actually asked me for your number yesterday. And she said, but he's not just one of those guys that, sends off a dispute to every lender. And then I've got disputes on these accounts, and now I've got to get the disputes off before I can close the loans. I said, no, Steve does it different. So pretend like I'm your client, and that's my credit report. Okay. And I want you to talk to me about it. I want you to give me a consultation. I want you to tell me what you do. I'm going to ask you what you're going to charge me. How long is it going to take me to get it done? So thank you so much for being here, Steve.
Sure. So,
all right.
The credit report that I've got from you, Miss Mark,
yes,
is your husband and yourself.
My credit's excellent. My husband's isn't.
You have great, great credit. But I'm going to flip the script on this one.
All right.
The husband's got good nose.
All right. Husband's got great credit. Mine's terrible.
Husband's got good credit. Yeah. So, and this happens a lot. One half of the couple will come in with great credit, and the other will be less than stellar. In this particular case, Papa, is getting, a little bit of the short end of the stick, because he's somewhere in the 680s or something like that, 660s, which isn't normally that bad. It's average. You can do a lot of stuff. I have a lot of clients that would love to have that. But in this case, Mama has a 780, so it's not working.
Right.
So you have a big discrepancy between the highest and the lowest, and you're always going to have whatever interest rate's going to be on the lowest credit score. So the goal is to get the lowest credit score on par with the highest score, whether it's the husband or wife. So
Right, because if I take a loan application and I run the credit, even though one might have stellar, we're going to use that lowest middle score
Right.
for the actual interest rate that's provided. So,
And if
that,
you need
that
the
can be very
income
frustrating.
from both,
Right.
then it's a little frustrating.
Right.
And here's the thing: the caveat can be the person with the high score can have make no money. They
Right.
they
Right.
might be the maybe the wife who just stays at home and really does all the work.
Right.
Definitely. I guarantee you my husband does more work than me
Yeah.
and he's at home.
And so I mean, any scenarios,
Yeah. All right. So what would you suggest in that situation? There's, there's some older collections that are on there. There's some little older, charge-offs that were on that credit report. What would you suggest to me? Would you suggest that I, sign up for the program?
Yeah,
where are you at on that?
on this one, there's about 10 to 13 gray areas that are medical collections, different types of collections. I want to say a couple utilities, but a lot of them are medical. So when I'm looking at them, this particular one comes from one company. A lot of the medical data is $63, $70, $90, $80. These are Tylenols, Vicodin, God knows what. I mean, it's crazy. A bunch of these are on here, and they're all from one company, one collection company. Now, when I see this, I do like it. It doesn't mean everything's going to come off, but if we get normally one of these accounts off, they do generally fall like dominoes, because these are all, you can tell it was one or two scenarios. It's generally the way it is. You have a hospital stay or two.
And how do you feel about medical collections? Like you said,
I love
when
them.
you see, okay.
I love them because they violate your rights as a consumer. They don't mean to. I mean, these are people trying to do a job, and there's just so much to do, they can't keep up with it. By law, they're supposed to give you 3 notices: an initial, secondary, and a final notice. They generally don't do that. The HIPAA Act says you're supposed to not share doctor-patient confidentiality, and when an item goes to collection, they end up sharing information they shouldn't. So we get them on the HIPAA Act. So I love it when I see medical.
Okay.
I really do.
In this situation, you're saying this would be a really great candidate
it's
because
great
you could get a lot of those collections.
on a couple things. And then, I'm the kind, most of my clients are sent by lenders like you, and I want to, I want to be able to get you a loan. That's why we talk. So on this particular one, since Mama has good credit, I'm going to suggest that we add Papa as an authorized user to all her good accounts. So we want to try to piggyback on her good credit. We might get 20 points, we might get 40 points, whatever we get, but we're fighting for every point. We want to close that gap. So between getting the items removed, if the client ends up enrolling and doing that, and maybe showing up their other credit card utilization, they should be fine.
Okay.
This client should be 740 to where Mama's at. Right?
Okay, and so what do you think that the time frame for that to happen? So you're saying, this client you should be able to get them to a 740, right? Like that would be your goal.
I mean, this one here, it could be a short
and it's
end.
this scenario. We're not saying that everybody
This one
out
here-
there that's
this
something
one here,
he's gonna be
because
able
it's
to do.
all one company. Technically, this stuff could fall off first round. A lot of them off that one particular Sears company, and the score could just spike up. And then we add, and I can get a call from the client. Hey, I'm up 60, 80 points or whatever, and we just stop and we're done or whatever, and we continue.
Okay.
But this one's one company, so I would expect a lot of it to fall off like scales. I would hope it would.
Yeah.
And like I said, if a lot of those come off, plus what we do, they're going to be good to go all day long.
Okay. And what are you going to charge me to sign up? So I say, okay, great. You know what, Steve, that sounds amazing. I definitely want to do that. I'd like to see what you can get off of the report. Sounds like we're going to probably need maybe 2-3 months, to get it done. It's, realistically, if it doesn't come off by the 3rd round, it's probably not going to, but, there's a really good possibility. If they're medical, you like that. So what's it going to cost me?
$499 is the initial enrollment. That includes all the legal paperwork, my coaching and consulting where I get involved, and my staff that helps with processing and stuff. After that, it's $99 a month. No contracts, no hidden fees. Clients that come from Mortgage Mom Radio always get $100 off, so it's $399, and then $99 a month after that. So,
Okay, so you're talking $399 and then $99 a month, and we're going to call it maybe 3 months. So you're at $699, $700, and you might have gone from a $680 to a $740. in my opinion, totally worth it.
Oh, absolutely.
Yeah. So if somebody wants to give you a call, number one, if you guys want to get a hold of Steve, obviously you can reach out to us. Me or Heidi are going to get you guys in touch with Steve and, on your way over there to get that credit started. But if somebody wanted to call you direct, how do they get a hold of you?
Call me 818-932-9531. If you forget that, I know you hear it all the time, go to askthecreditcowboy.com. It'll prompt you to get on there. I'll chat with you, whatever. It's really easy to remember, askthecreditcowboy.com versus a phone number.
All right. Well, that is probably that's probably the best thing. Go to askthecreditcowboy.com. You guys can reach out to us. Again, we want to answer all of your questions. Every week we're here. We're live at 5 on YouTube. If you guys are listening to the radio, please keep calling, texting, emailing. You guys can get a hold of us. It's 844-935-3634. We're done for today, but we'll be back next week.
Yep. Have a great week.
Yes, and thank you, Steve. You were fantastic.
Thank you. It was fun.
Thank you.
All right. Bye-bye.
Bye.
Debbie Marcoux is licensed by the California Department of Business Oversight under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 094-1504, Georgia 69178, Illinois 031.005-8339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926, Heidi Slade Points, California, DBO 1666881.
She's the mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call mom.